Hello, 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 everyone. How is everyone doing today? Quad witching, eh? Hey, Mike. What a day. Nothing really happened. I thought it was a fantastic day, actually. It was not boring at all. It was it turned into a fantastic trading day. Wow. No, I don't think it's going to be a bloodbath next week. Not unless something blows this weekend. Uh, Again, I don't think it was boring. I think there was a couple great, fantastic trades in there with that a little stop hunt move in the morning, and then the bounce back to watch for that return to 3,700. Oh, Waka Waka thought it was a mess. Good job, Patrick. See, best. He's probably the smartest of everyone. Spent the day working in the yard. Green day next week, so we can fill gaps in SPY. Well, we have some setups. Most of the play was this. I thought there was some great play. Mixed thing I put in the Discord this morning, the question about why mega caps, because they can influence the indice the most. So if you're trying to prop stuff up, it was going to be mega caps and short squeeze stuff. So that's where we sat today. By the way, if you are new here, we're closing in on 5K subscribers. If you're watching this and not already subscribed, please do consider subscribing to help the channel hit that 5K number. 5K subscribers way before 5K S&P. Let's put it that way. That's what we're shooting for. So we'll recap. Let's see. There's your mix. By the way, here's your week performance. And what was this, down 11 to 12 weeks, which set a new record, but that is ugly. And let's just glance at the month performance so far. Oh, oh, if you were bullish, that is brutal. So there we go. That was, but the day's performance was, besides energy that's got crushed. Uh, so that's where we stand. We don't even have to review the gamma stuff because uh, we had expiration day. We'll have to reassess next week. By the way, Consumer Board Leading Index, which came out after the live stream this morning, came in line but down 0.4%. By the way, holiday on Monday for stocks, but futures are just shortened trading and they're still regular open for everything I follow. Uh, Unless you're trading livestock or lumber, they're closed. But a lot of the stuff is regular trading hours starting Sunday night. So what does that mean? That means I'm here Sunday afternoon to help everybody still prepare. Why? Because we have to prepare for the futures. And then a shortened date on Monday for the Juneteenth holiday. So futures close for the equities at 12 Central Time, for cryptos at 4 p.m., for interest rates at noon, foreign exchange 4 p.m., and energy, metals, and other stuff at 1:30 Central. So keep that in mind. So if you only trade the stocks, you get Monday off. For us futures and stock traders, we don't, unless you want to take it. So let's see. Did I did you see the TT Ameritrade option in the morning? I wouldn't buy the dip in SPY or Apple. I did not see it. Yeah, happy long weekend. Crude went down midday. Do you think it will reach 100 before it goes up? We have a trend line in front of that. What's the deal with energy? I don't know. Crude got blasted, went through the final double target, and then just got blasted. I was trying to figure out what was going on, and could not find anybody who had anything other than there was just some massive selling came in at crude. So once I do get some information, I will pass it along. By the way, you see pretty neutral day with a slight upward bias. Still futures still trading as of this recording. 36.85, 36.86. Fairly close to that 3,700 major strike. We are set up for a nice little move, though. We have this nice 4-hour potential double bottom. So that's what I'm watching Sunday night to Monday. And could this trigger well before stocks come back online Tuesday? Yes, and it's into a clear path move. So that's what I'm watching. That's the trade. for the beginning of the week. I will have to update some other levels over the weekend in preparation for Sunday. But that's the first thing. Now, let's see with the daily rotation zone. See, that's even takes us right in front of the daily rotation zone. So I just wanted to point that out to everybody. With the daily cycles turning up, and it's still mixed because you got the weekly cycle still turning down and a confirmed cycle rollover. So we could, it's still so challenging even with this out of the way, but that's the pattern in play that I am keying off of. In the NASDAQ, the why I got asked about this double, why this was a double that I was not watching on the 4-hour basis is because this is a stair-step pattern. It was on the 1 hour, but did not trigger. Confirmed. It's better to see how it looks. If you see this with that push down, looks really nice on the 1 hour, whereas you get the 4 hour, it's stair-stepping higher with these higher highs. So if you were trying to do it off the 4 hour, you might have tried to put this as the peak, but this was really the peak based off the 1 hour. So why it's handy to do multi-time frame, and it never triggered off the 1 hour. So I'm going to still be watching for that one to trigger above 11,348, then 11,463, 11,520, 11,578. And that would just see, that would even take us back to a reconnection with the daily rotation zone. So that's where those two couple things stand right now. Let's see, what else do we have going on? I was really just focused on the S&P all afternoon. Dow, not much going down. Oh, by the way, here was that move in the S&P I was talking about. I mentioned this on the live stream that if we got below that 62.5, I was watching for that little move. So we had the run up in the beginning. Little double triggered run up to retest the high area, and then we got that close below that 62.5 from yesterday. Let me just go over this stuff. The close from yesterday below that 62.5, which was right here on the harmonics. For those playing along at home, 62.5. So then the target area was down here with the potential flush out move. Got the flush out move right here, with a nice little reversal pattern reversing up. So then what did I watch for going back up? Which I said watch for a potential stop hunt unless we get major momentum through there. We got a reversal pattern right there. And then you got your move back above the 62.5, and that was to retest the high area, which we did. Now it looks like it's going to die right around just below that 6,700. So that was it. Let's see. That's where that stands. We don't need to cover the Dow now. I'm actually pretty tired. Russell, we'll take a look at some of these on Sunday. Or if you're out doing stuff, then just tune in and watch the recording. Crude, here's what we're talking about, coming back down. And then just momentum bars. Here were the momentum bars. Coming back down, was watching to see if it held there. And you just see these momentum bars. So the only trade, and this works not only with the indices, whenever you see momentum bars, for those newer, what are momentum bars? You get a bunch of red. So we start getting them here. Little pause. Once we broke that key area, it's just that cascading momentum. So that's the trade to go with. And then just a little pause here. And when you start seeing it hugging that 5-minute rotation zone with very little overlap in the bars. See how there's very little overlap? That's your key for momentum. Back to the 5-minute rotation zone and then just rotating down until, crude going into the close. So can it hit 100? The area that I will be keying off of for Sunday night, Monday, remember it's still trading, is major support at 105 to 104.46. So we get a close below 104.46, then I would be targeting, yes, then statistically, I can say we should return to the 96.84 to 93. So 100 would be within that range, and that's a 75% harmonic. So that's where that sits right now. Yeah, there was no capitulation. This was not a capitulation, so we do not have a capitulation buy. Capitulation buys were never triggered. We never got any flush out move. We just got a stop hunt move, and we never got a close below that 46.50 area. And so it's pretty much done. Could we set up for another capitulation move if we have another horrible week next week? Yes, potentially. But there is not one now. So the only thing I have are those short-term buy patterns. I have a bunch of other capitulation signs that are that I don't need VIX over 40. And you can get a capitulation well without VIX over 40, by the way, Waka Waka. You can get a lot, you can get capitulation moves without VIX over 40. They've happened in the past a number of times. Is this called short squeeze from OpX already? Well, there were some stocks that got some squeeze attempts today. Just they were over shorted, but I wouldn't really call it a short squeeze with OpX. There wasn't a massive. There were some stocks that got squeezed, but there was not a squeeze of the short positions. It was just more just with OpX expiration. Let's see. I'm not sure why everyone is expecting a major move in the indices. We just had the biggest sell off of the year. I think it's possible we consolidate for a while. We could consolidate to be slightly up. You know, we got to trade the patterns. Got to trade the patterns. So, I mean, overall, in your indices, also, we are coming out of a little divergence out of oversold conditions. So, what does that mean? I mean, we still have the rotation zones down. So, anything on rallies, especially bigger rallies, are to be sold. Especially if we get through that double and into the daily rotation zone. That could take us back to the breakdown zone and then roll over, or we could consolidate down here and be choppy. But long term, it's still in sell mode. Even if we got a bigger rally, it's still in sell mode. It's just with timing for the next major leg down. Remember, we don't have much going on with earnings are pretty much wrapped up. I mean, on Monday, you pretty much have Lennar. That's not really paying attention to Reservoir Media or Acasti Pharma, but the thing will be Lennar with the home builders, but that's not market moving. And then earnings season's wrapping up, so then we have to wait till the next quarter earnings seasons kicks off for anything other than whatever happens with numbers that come out. And we'll take a look at numbers on Sunday. Yeah, but I don't know if they'll slow down this one because liquidity is so dried up already that things can move pretty big. Liquidity is just, the depth of market is not there already before we got in the summer. So we could get over exaggerated moves due to you would generally get a lower trading volume in the summer and lower depth of market, but we're already there. That's the problem. Hey, Amit. Next week rally, will we trigger some of these bottoming patterns? Yeah, we could get at least a little pop next week. Filling the Monday gap on ES. Well, that's what we will be watching for. We will be watching for the gap play fill up here, but that needs to really get a substantial rally, and we have major resistance at about 3,800. So even on a bounce here, I need to then see a move, really a solid close or significant momentum above 3,800 before I can target the gap fill. But we do have that gap fill up here in the daily rotation zone right in front of the 50% retracement of this down move. So if we do get a bigger rally on, you know exactly where I'll be focusing. The gap fill to 50% into the daily rotation zone. If we can get a move beyond this short little term pattern. Do the probabilities change on the pattern? Do the probabilities change on pattern on high volatility days like today? They're not as reliable because there's other influences in play. What will stop cure inflation without a recession? I that they need to have a recession. I don't think there's anything that can cure inflation. It's a little too embedded. You know, if we were only running 4%, you might be able to wind it down, but not like even if 8 drops to 6 or 5, that's still way too high. But we're going to already tip into a recession sooner than later if we're not already in one, which we might already be. I mean, I've talked to so many people who are just getting crushed by these gas and food prices that they're dialing back every other purchase besides core necessities. They're even changing trips around. They were planning on doing a lot more driving this summer. They're like, no, it's taken up, what we were planning on doing. We've changed our plans. And airline tickets are a lot higher. Keep in mind, they did a huge jump too. So, people are severely changing. That's why I talk to a lot of people, because they're changing their plans. So once that starts happening, things start slowing down. But then it's going to take a bit for the unwind. Then that's generally what will bring down crude longer term. Longer term would bring down crude, and crude even trading at 108 is not brought down. But longer term, we need a substantial global recession to really put a kibosh. But that's what, that'll hurt a lot of people. But I think that's what they're secretly counting on. So no vacation. Well, people might be doing more staycations or just short little trips in the station wagon. I don't take vacations. I got 5 rescue dogs. Where am I going? I do work all year round. And it's tough to travel when you got 5 dogs, especially both of us, because there's some of them that can't go in a kennel. They just couldn't. And they're, with my dogs, they do not come from good circumstances, and they come from very abusive circumstances. So you have to have people, you can't just hire any old pet sitter. It's really challenging. I know I'm exhausted, but yesterday you were talking about BOJ. Oh, I was going to talk about that again. Would you be willing to elaborate? Well, look at this. Thanks for bringing that up. This is super interesting. Remember this morning when I put this up there and the peg was back down below 2.25%? Look where it ended. Look where it ended. So what they have to do is now just keep buying. If they're going to keep this peg, and this is starting to get tested. This was fascinating today, because up, and then if I go to a shorter term chart, you can see how boom, and here's where it closed. It's hard to see, but this is where it closed. But you can see this is them coming in to intervene. All right, buying up the bonds. And then they stopped buying, and bonds rocketed back up. So how do they need to do this? They literally have to print money to keep up this peg, because they have to keep buying. And they said unlimited. So literally, if they want to keep this peg, and here's the peg. And when it's pegged, people say, well, it can't. Yeah. See, pegs can move around that area, but it's like a little wave around that area. See, every time it poked above, if I draw a line here, if I draw a line at there, that's close enough. 0.251, look. Pop above, below. Above, below. See, every time it popped above, because they're stepping in and intervening. Then it started to get dicey here, but still pop above. It starts edging up a bit, but then boom. They brought it back down, and boom. So look at these moves in the end. Now we do have a potential double top, and we're back trading to that 135, 10, 15 area, which was the highs back from 2002. So this is the yen getting weaker, because they have to just, hey, whatever, we're going to do unlimited buying. Now, at some point, it's going to have to be reevaluated, because if there continues to be pressure on their bonds, they can say we can do unlimited, but is that really true? Because that has major repercussions long term for a currency, and it's getting pressured. So this is something that if this were to blow and that peg were to unravel in a more violent fashion, it could get very interesting for the markets. So that's why I keep this on your radar screen. Especially if we keep getting pops like this, they bring it back down, and then it keeps getting pressure. I mean, you see any other moves like this, like to this magnitude? You see any moves to this magnitude? And you look at it on a weekly basis, look at that. And they used to have other pegs. That's where these things get. But here's the current peg. And if that really unravels, you could see some very interesting long-term moves in the Japanese government bonds. When we are in a recession, we'll still be able to trade actively when there are no significant volumes. Yeah, you'll be able to trade actively. Trading doesn't stop in a recession. And remember, the market looks about 6 months ahead. So we're still could be in a recession. We could then be putting in the longer term bottom at some point before you even get out of it. By the way, here's another reason why we're not at the bottom yet. You want a little. Here you go. How do I take my money back from stocks? I decided stocks aren't my thing. Is there a way to get my money back? You can sell the stocks. I don't want to sell the stocks. I just want my cash back. Is that the only way? There's no refund policy on stocks. Oh my goodness. You know what? When we have more people flushed out of the market who shouldn't be actively in the market, then we'll get to a long-term bottom. Oh boy. I mean, that's just how do I get my money back? How do I get my money back from cryptos? How do I get it back from stocks? How do I get it back from AMC? How do I get it? We're not done yet. With inflation this high, it's going to take a devastating recession to undo it. Now the brilliant folks in charge are floating the idea of having the government hand out gas cards. And did you see why they couldn't send out gas cards? Because of the supply chain issues. And they're just trying to repeat the 70s. That's all they know what to do. So, no, we're going to need a severe recession, even with another 75 basis point hike, and then 50 basis points. Your real rates are still negative. It's going to get very interesting before all this is over. But I would actually love a rally because that's the way you get on some new good short positions. When will you feel like holding comfort? When I get a major bottoming signal. Even a capitulation bottom would just be a medium-term bottom. That wouldn't be. It'd still be trading around, that would be just. You're latching onto some more swing trades. But when do I get long-term again? When we trigger a long-term bottom. And do I know when that will be? No. Because we can go through a lot of pain. It depends on the severity of the recession, just like Sterling thing. We need a devastating recession. There could be a very interesting stuff coming up. I mean, I'm already talking to people who were going to retire at the end of this year. Now they're like, I don't think I can retire because I have everything still in the stock market and my portfolio just took a huge hit. So I can't afford, I've already taken a 25, 30% hit in my portfolio and I can't retire just yet until that bounces back. So there's things are going to change and it's going to be interesting. And this is not easing up. Even if we get some really nice rally, it doesn't change the long-term fundamentals yet. Hey, Patrick, thank you for the super sticker. Thanks. Big shout out to Patrick for supporting the channel. The crude oil was good from the short side today, yes. With last quarter GDP negative and it's possible this quarter GDP negative, what is market participants looking for to know things are turning for the better? Earnings, Fed pivot. Again, the Fed's stressing again today that they're, possible 75 in July, then a series of 50s after that. Until they get inflation down. They just keep reiterating it. I don't know where the Fed put is either, because if inflation keeps running, that's more devastating to the economy than a stock market that hurts. Stock market sell-offs hurt people. But remember, about 50% of the country doesn't have really any stocks. But they sure get inflation hit hard. So, yeah, that'll be, and it's not the official definition anymore. It's when they decide they're in a recessions, and they generally decide, well, after we're in the recession, that, oh, we've been in a recession for 6 or 9 months. Well, that's really helpful. Uh, what will be the signs that things are turning for the better? We're still going to see, my theory is we're still going to see earnings compressions based off of stuff. Once earnings start turning around again, and from a technical perspective, once we start seeing some bottom price action in longer term bottom price action in like consumer discretionary, when we start getting PEs in line from a fundamental perspective, when we start getting people just tossing in the towel on the market, like, I'm done. I'm done. I don't want to see another stock. I don't want to look at my portfolio. I don't want to see anything anymore. We'll be closer to the bottom, if not have put it in. Hey, Coco. What is the odds? I think some crypto will survive in the long term. We don't need 19,000 crap coins. We don't need more than a handful of stuff. And we need regulation. Until we get meaningful regulation, until we get the riffraff out of the crypto market, and until it's really, until some things blow up, now they're talking, this is the same thing. They're talking about crypto regulation. This is when the regulators get involved. Once you start getting everything going to crap. How much were they involved when it was going up? See, this is the same thing. And there's other stocks that shall not be named that once they do their major flush out move, there'll be investigations and other stuff. And then it will be, oh, look at all the stuff that was going on. If only we knew. But that's how it works. That's how it works. It takes things to unravel. Remember, people were warning the SEC back in 2000 even about Madoff. How long? And it took the markets to unravel him, essentially. And then it was like, oh, we'll crack down. But yeah, after all the damage is done, regulators aren't proactive. So cryptos, there'll be a handful of cryptos that survive. There'll probably even be some second generation better stuff in the long haul. The technology's not going away and stuff's not going away, but it needs some massive regulation. And this is coming from a libertarian, because if you can't actively trade or invest in something if you literally have no regulation, which is my problem with the SEC and the CFTC that's been asleep at the wheel for years. And I'm not a government agency guy. I want very limited government. But again, if you don't have any regulation and you let stuff just run rampant and it becomes the Wild West of trading, stuff blows up eventually because you have no groundwork that's enforced. Which is my whole problem. And I've been talking about stable coins. How long have I been talking about that? For longer term people have been on this. How long have I been talking about Tether and stable coins being the Achilles heel of the crypto market, and that at some point all this was going to blow? It's been for a long time. So yeah, you'll have it survive, but we need to really flush out that stuff. And unfortunately, regulators step in a day late and a dollar short after all the horses are out of the barn. The other thing that nobody is talking about is the effect that higher interest rates have on all the debt and the government has. Yes, that's where it's going to get in. The debt service payments go up. That's going to be the other thing that's going to get very interesting. That's why I think they are really counting on, they're not going to say it, but they're really counting on a pretty significant recession to cut demand and let the supply chain work out longer term. and really squash the demand down because they can only get rates so high because of the government's debt service. But then is their government going to stop? Didn't you have Rand Paul trying to put through a balanced budget act that was pretty much shut down the Senate, even by a bunch of Republicans? They don't want to do the right thing. They don't want to balance a budget. Nobody wants to. Until it's going to get forced, and at some point, who knows when, but it will get forced. You will. Well, I don't know how old you are, and I hope you don't die, Coco. But you'll see a bottom before you die. It's not that bad, Sterling. That was not a strong rant. I'm just passionate about this stuff. Thank you, Dr. Michael, and you have a wonderful long weekend too. Daniel, let's see. Mike, you are a saint to those dogs. I can't tell you, but happy Father's Day, and you have adopted all of us mongrels. Thank you. Well, that's just who I am, and thank you for saying that, Daniel. And I'm also here, besides the dogs, to help people navigate these markets. Any chance penny stocks will recover? My penny stocks portfolio is down 90%. I don't trade a lot of penny stocks for a very specific reason, because they got pumped up with everything else, and penny stocks, there's a reason it's a penny stock. So some of them will disappear, some of them will probably survive, some of them will get pumped at times, but it's not a great way to base a stable portfolio. Fed Reserve and some crypto founders stole far more than Bernie. I agree. Some crypto founders stole way more than Bernie. Way more. And once the whole crypto thing does blow and wash out, it will make Bernie Madoff look like amateur hour. Yeah, stablecoins talk since I can remember. And I've been telling you, and I got poked fun of a lot privately. Oh, you're just being silly. That's never going to happen. It's never going to happen. Crypto to 100,000, crypto to 1,000,000, crypto to this, crypto to that. Well, yeah, but you're having it artificially pumped up by printing fake stable coins that aren't tied to anything. That's the problem. I see it, William. Well, thank you. I keep it real. Before William keeps putting in here, let's get to Facebook. Facebook, nothing's changed, William. Nothing's changed, because I don't cover things like this on a 5-minute chart. There's no way. I mean, there are patterns here. This is where you have to learn to trade them. But on a bigger perspective, we still have the potential double bottom play. That's what you're going to be watching for, William, next week. All right? Still in play. There you go. If you want an earlier play for that, it triggered an aggressive 4-hour buy, but I'd be looking for a break above. You have the gap fill play, so you really start taking off about 166 on Monday. You got the gap fill play, and that could potentially be rolled in. And I'm talking this gap. Here was the close. Here's the open. So you got a gap fill play. If you break above, let's call it. I just call it 166. Gap fill play, and then if you want a bigger play, if the market does stabilize, we put in some of these bigger double bottoms and we get a little rally. You have another gap fill play and a double trigger. 177.52, 180, 30 something, and 182.89, and you technically have another gap right there. So those are your plays in Meta. Screw all the pump and dumpers. I agree. Same guys are saying buy the dip this year, telling you to wait to buy stocks. So with Kramer saying wait to buy stocks, yeah, that means we'll probably start a rally, at least a short-term rally. That's not a long-term signal either. You have a great weekend too. Thanks for reading Great Dad, Human Canine. Now, I don't have any dogs. I have rescued a cat before, but cats and dogs, it's tough especially when you have abused rescue dogs. I'm trapped now because of Reddit pumpers. Dark Screen Sheep, I'd suggest, if you haven't already subscribed to this channel and learn some real trading methods because your portfolio might have taken a hit, but you can always rebuild long term. Okay? And learn, instead of following the Reddit crews and the apes and everything else that's out there, learn to invest and trade properly. And there's tons of free information this channel gives out on a regular basis to help people learn how to do stuff. And the long-term people will tell you that that is why they are subscribers to this channel. Oh, you just said that? I didn't even see that. Subscribe to this channel and learn. That's the way I started. Mike changed everything for me, and I'm glad. Jim Cramer should be jailed. I don't know how his stuff's not. I mean, the financial news media, and I make him part of it, has turned into a bunch of crap. I remember back in the early 90s, it was halfway decent. Then after you got the .com stuff, it started to go downhill. And then ever since then, it's gone downhill. And now, I don't know, they're more like pump and dump shows. And even you turn into the regular during trading hours, let's have the CEO on and pump his stock. It's like, literally, you guys don't investigate anything. You don't actually do any due diligence. It's all just a big hype promotion. That's the financial media. It's why I don't watch it. See, you're getting good advice, dark screen sleep. Spend the time here. You can't make back money, and don't try to make it back overnight. It's learning the right techniques, and sometimes the best thing that happened to people, and I know this doesn't sound good, is to lose your first portfolio. Why? Because then you realize that, hey, that's the tuition I paid the market. I better learn some better ways of doing stuff and stop listening to a lot of crap out there. It's really easy, again, when markets are doing this, which, look, I mean, besides this COVID flush out, I mean, look, when markets are doing this, everybody thinks they're a rocket scientist. Oh, I'm the best trader. I'm the best investor. This blame it on COVID, but the Fed steps in, so buy the dip. This is what separates the people who thought they knew something from the people who are better at it. Since I joined, I learned more than I could ever imagine. Trust me, I lost a lot when I first started, and that's why you start looking for credible stuff out there instead of the people who just tell you to buy more when it goes down and average down, and then the market doesn't come back, and then they're like, oops, sorry. Or they got out a long time ago, and then they're just like, oops, sorry. All right. With that, I'm not seeing much more. We'll review on Sunday, dollar index inside day today, but I'm still watching for a potential big topping pattern. Notes were again still volatile, but I'm still coming back. We came back to the double trigger point, and then still watching for this to follow through next week. That's where we stand. Yeah, you have a great weekend, Wavy. You too. Thank you, Rich. Thank you for those very kind words. Thank you, Patrick. But by the way, come back then. If you really want, I know a bunch of you are subscribed, but please, some of you still don't leave comments. And please just spend 5 minutes or even 2 minutes just leaving a couple comments on videos. All right? Because look, we're getting the subscriber here. We're bringing in people. I mean, you're seeing new names in here. And this is the point of this, dark screen sleep. We're seeing new names that people are still, especially nowadays, are looking for help. And that's the way the algo gets out this message. And then they can be part of this family and at least learn some techniques, at least learn how to manage risk. So keep doing it. Everybody have a fantastic weekend. Remember, I will be on Sunday, and if there's stuff, even if you don't trade futures, if there's stuff that really sets up, I'll be back on Monday if there's good setups. Thank you, William. So this channel doesn't go away just because it's a long weekend. I will talk to everyone later. Have a fantastic weekend. Do something fun. Shut off your computer. and get some sun. Hey, that sounded good. That was a little rhyme. Bye for now.